And it's time to do business again. This time around, it will be 55 minutes of going around the world of business. Welcome to Business Incorporated, and here's what we have prepared for you. We'll start off in Egypt, where the net asset has recovered from that $3.6 billion shortfall. The internet is part of our daily lives now. The threat is real. We'll give you protection tips. And the Central Bank of Kenya has gone to the market. They want to raise 30 billion shillings in 2 bonds. Welcome to the program. I'm Ini John Mekwa. We'll start off from the oil space. As usual, oil prices rose in Asian trade on Friday, and we're poised for a third straight weekly jump, buoyed by growing expectations that the United States Central Bank will soon start cutting rates and firm complex refining margins. Brent crude, let's look at the numbers since we're right here, yes? So it's 0.56% up for Brent, $86.87 a barrel. WTI is also up more than that, 0.64%. $82.26. And yes, the dollar is a driving force. And then the expectation that the Fed will start cutting rates is also a driving factor at this point. Brent and WTI futures have gained nearly 2% so far this week, with both benchmarks also on track for gains of slightly more than 6% month on month. And then we head to the metal space right there. Gold prices just a little bit changed on Friday, but we're poised for a third straight quarterly rise while investors await U.S. inflation data for fresh clues on what the Federal Reserve will do concerning the cut or no cut. Spot gold nearly unchanged, $2,328.42. Prices have gained about 4% for the quarter. U.S. gold futures edged 0.1% higher at $2,338.80. And also a soft sell of PCE figures is required to keep alive hopes of that Fed easing. And then gold rose more than 1% in the previous session after a slowdown in U.S. economic activities. Meanwhile, Fed Governor Michelle Bowman maintains his stance that they're still not ready to support a central bank cut. We come to Nigeria now. Latest data from the NBS, the cost of healthy diet up, as with every other thing, 32% to 1,041 naira per adult per day in the month of May. There you have it. So let me stay on this side. In January, it went up almost 10%, 9.2% at 858. And then it went to February at 938. Notice the change also, or more than 9%. And then it went down to April to more than 1,000 naira. And then for May, we see it at 1,041 naira for May. So year on year, even though it's gone, well, okay, that's gone. So looking at the states with the highest average, I guess people who live in this state are more conscious of healthy living. We see Ebonyi tops the state with highest average of cost of healthy diet. And then followed by Kano. Kano has the lowest. Well, perhaps, I think one common thing that run round, you'd see a lot of those vegetables and tomato. You see them in these states. So it's easier to access. And then when you add transportation logistics to move them down south, then you see that it gets more expensive. Southeast had the highest cost of healthy diet at 1,184, while Northwest had the lowest. So I think the trend there is those states that have those vegetables that are being used, a lot of them, it's easy to access and it's cheaper. But guess what, on the other hand, when you look at petroleum products, for instance, because the ports in the southwest, the most active ports, that is, then you see petrol and all of that cheaper in the southwest. Lagos, for instance, has the cheapest when it comes to petrol. So I guess, well, you win some and lose some. So when it comes to the cost of healthy diets for adults, it's more expensive in the southern parts of the country and cheapest in the northern part of the country. Now, the Federal Competition and Consumer Protection Commission, the FCCPC, has turned its attention to what it describes as seemingly unwholesome practices in some supermarkets, in the supermarket retail chain. In a meeting with members of the National Association of Supermarket Operators of Nigeria, the acting executive vice president of FCCPC shared some findings to include different prices for same products in the same supermarket. And of course, they raised question of this to the Supermarket Association. And the response from the supermarket is to explain the process, which they say sometimes there have been errors that have led to some of this misconception.
When a price is changed in the system, automatically stickers are printed out which have to go to the shelf and replace it. It's done. It's automatic. Otherwise, the price cannot be changed. Now, if a young lady, let me call her Funke, is now taking the sticker and she's busy believing that this can wait, and you, my dear sister, comes and buys at that time and without Funke replacing, is a problem. In fact, what is the intention of the retailers? We want the prices to be lower. We want the consumers to be able to afford. We want you to buy more. We're not happy with the volumes of sale. Just for your information, that the volume of sale, the volume of goods, not the value. Volume of goods have gone down by 50%. 50%. Where if we were selling 10,000 cartons of Coca-Cola in a particular year, today it is not even 5,000. And I believe it's for everybody the same problem.
Yeah, well, supermarkets themselves say, well, they do not want the prices to be high because so far they've recorded 50% drop in the volume of their trade, and explaining some of those misconceptions that perhaps the FCCPC noticed. But I mean, they also call on us as consumers to be more vigilant and attentive when we go into supermarkets. And if you see anything wrong, then you point it out and follow it up. Now, the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NASIMA, is the latest to lend its voice to the need for government to implement laws that will protect local petroleum refiners. The national president, Mr. Delioye, brought this to the fore at the second quarter council meeting, which is held in Lagos. An enabling environment for businesses to thrive in Nigeria is yet to be attained and remains a huge concern for the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, NASIMA. Their second quarter council meeting can hardly avoid discussing their realities in carrying out daily activities. The association has also factored in how PMS supply from Dangote can ease their work.
I will also appeal to the government to support Dangote so that at least his rollout for the fuel, that will reduce the request or the use of our limited foreign exchange to buy import fuel. And that itself will impact the price of Naira if it is properly channeled. This idea of issuing new licenses, which was recently mentioned, to various people to import substandard fuel, we condemn it. And if we already have a local one here, why are you trying to import? Give the man the crude. He's not asking for credit, he wants to pay. So these are the challenges, and we ask government to provide some of this so that they can be a more enabling environment.
This gathering is proof of the enduring spirit and resilience of Nigeria's business community.
Representing the governor of Lagos State, the Commissioner for Commerce, Cooperative, Trade and Investment assures the association of plans to ease doing business in Lagos.
One of the key priorities for our administration is to address the infrastructure deficit that has long hampered economic activities in our country. We are making significant investments in power, transportation and telecommunications to ensure that businesses can operate efficiently and competitively. In addition, we are working tirelessly to simplify regulatory processes and eliminate bureaucratic bottlenecks that hinder business operations. Our aim is to create a business-friendly environment.
The meeting also discussed some internal issues, including the clash of dates for trade fairs. They prefer that regional chambers should collaborate with key stakeholders, including states and federal government, for better outputs. And now Nigeria's foreign exchange reserve has hit a new milestone this month as it rose to $34.07 billion. And that's the highest level since March. According to the data from the central bank, the increased external reserve position, which is quoted as at June the 26th, comes after 3 months of noticeable fluctuations when it plunged to a low of $32.11 billion in April, sparking concerns about the nation's financial stability. However, the main drivers of the growth in reserves remain unclear. Just last week, the external reserve reached a 3-month high when it rose to $33.5 billion and have continued to surge since then, topping $34 billion for the first time since March 21, when it reached $34.2 billion. External reserves have now swelled by a substantial $1.3 billion since June. Now, let's stay on that effort of the central bank through the monetary policy and the coordination with the fiscal authorities and the regulators from that arm. We've seen inflation being tackled by increasing interest rate, but the latest numbers they indicate that perhaps we rejoiced too early at the other time that we saw those inflation numbers. But let's discuss this with the former Deputy Governor of the Central Bank of Nigeria, Dr. Oku Nana, joins us from our Abuja studio. Dr. Nana, good afternoon, and thank you so much for your time.
Thank you for inviting me.
All right, Dr. Nana. So the coordination between the monetary and fiscal regulators of the economy has been a major topic. And a lot of people say, as fantastic as the reforms of this administration is, the lack of coordination or balancing seem to be taking some of those benefits away from the economy.
Well, I hear you loud and clear. I don't know why the public should be so much worried about coordination. Definitely, the monetary authorities and the fiscal authorities in our country are talking to each other. The conversation is not one-off. It is a continuous exercise. But we shouldn't expect a quick fix. It doesn't imply that if the monetary authority talks to the fiscal authority during lunch, then you expect inflation to come down before dinner. That's not the way it works. It's a continuous dialogue. Monetary policy implies the management of inflationary expectation by the public. What the central bank does in conjunction with what the fiscal authority do. So it's a continuous dialogue. And it's not a dialogue of the deaf. But we shouldn't expect a quick fix. I believe the monetary authority is always in touch with the fiscal authority. And this conversation begins in terms and how inflationary expectation is being managed. In Nigeria, this is a continuous exercise. But we shouldn't be carried away that there's a quick fix. Our inflation in Nigeria is driven essentially by structural and monetary phenomena. Structural in the sense that transportation logistics, with its implication on cost push inflation, is here with us in a long while. It will not just go away overnight because there is a coordination between fiscal and monetary authority.
All right, Dr. Nana, I guess the reason this comes up is when we see the continuous stance of the central bank tightening, the squeezing, liquidity out of the economy and all of that. And of course, the impact it has on the cost of funding for the real sector. And yet, it seems inflation is not responding. And so it makes people look to what is the cause of inflation, and then we trace it to a major one, food inflation, which we know, of course, is not for the central bank to handle, but we wonder, so if the central bank is tightening, what are they doing, the fiscal side? What are they doing about dealing with the problem of insecurity, for instance, which is a major threat to food supply and drives food inflation?
It's a very good question you ask. Monetary authority manages inflationary expectation by using all the tools available to it. Increasing the monetary policy rate to the level it is now does not guarantee automatic slowdown on inflation. Inflation has been with us. The liquidity problem in the economy has been with us for some time. Yes, the central bank will tighten monetary policy rate. It will increase CRR. It will use all the tools at its disposal to squeeze out excess liquidity from the system. But we have to understand that our financial system is not too responsive. It's not very efficient. The currency outside the bank in Nigeria, as we speak, is humongous. The central bank can use open market operation, as it's using now, to withdraw as much liquidity from the system as possible. But is our financial market efficient, competitive to respond maximally to all the monetary policy tools that the CBN is using? My answer is no. Our financial system is essentially oligopolistic. It is not so efficient as we may like it to be, but we are getting there. But the fact of the matter is that there is a continuous dialogue between the monetary authority and the fiscal authority. But what we must fight against is what I call time-inconsistent fiscal policy and time-inconsistent monetary policy. Because inflation has been sticky and stubborn, does not imply that the coordination or the conversation between the monetary authority and the fiscal authority is not going on as expected. It is going on, but we should give it time. There is no quick fix.
So Dr. Nana, how much time? I know that, yes, I know that Nigeria celebrated the first year of this administration led by President Bola Tinubu. And some people did bring up this issue of time. IMF, World Bank, international institutions are applauding the administration for the reforms, yet the people are feeling pinched and squeezed. And so we ask, how much time would it be when the administration is in its second year? We would say, yes, we should see the result. And if we don't see it, then we can say it's not working.
Thank you again for that question. I enjoy and admire the impatience of the Nigerian public. If the truth must be said, an empirical study that we did when I was still working at the central bank, by the way, I left the central bank in 2020, some 4 years ago. The lag, the monetary policy lag, is about 3 months or more. If a central bank governor or the monetary policy committee put into motion a policy action today, we don't expect result tomorrow or the next tomorrow or a week today or a week next. It takes 3 months minimum for it to filter through the system. Remember, I said our financial market is not efficient. Monetary policy works with a lag. 3 quarters it takes for the policy to hold. If and only if our fiscal authorities don't counter it. Because if the central banks put into place an OMO operation to withdraw money from the system, and the fiscal authority is opening the tap, pumping money into the system, boy, then the central bank needs a very huge blanket to mop up the excess liquidity that the fiscal authority is pumping in. But to the best of my knowledge, I don't think the fiscal authority is doing that now. They are not. That is why we will encourage the fiscal authority to please remove their leg from the fiscal pedal. Don't pump in money into the system. Money being pumped into the system does the economy no good. No countries don't grow their economy, GDP, because you pump money into the system. It doesn't work that way. If it works that way, then what will happen is that every government will be printing money and distributing the money they have printed by helicopter. So the people, the citizens, can harvest that money and start spending. If you do that, you'll be stoking inflationary expectation. It doesn't work that way. So my plea is that we should be patient and see what the fiscal authority and the monetary authority are doing. With time, I believe the inflationary pressure we find ourselves in the economy today will peter off. And when it peters off, we will emerge in the era of stable economic growth, which is less inflationary. But at the moment, the liquidity in the system is still overwhelming.
All right, Dr. Okunan, well, I guess your message to Nigerians, let's be patient. I wish you would give, should we be patient for a year to the end of 4 years? But I won't put you in that tight corner. Thank you so much for your time, former Deputy Governor of Central Bank of Nigeria. Your message is taken. We'll be patient and give the administration more time. But thank you for your thoughts.
Thank you very much. Please let the Nigerian citizens realize that there's no quick fix. If there is a quick fix, then we won't be talking as we are talking now.
All right, that's noted. Thank you. So Nigerians, Dr. Okunana says, please be patient, give the administration more time for the policies to take root and for the benefits to be felt. Anyway, let's take a break now. When we come back, we'll head to the market. It's still Business Incorporated right here on Channels Television. Welcome back to watching Business Incorporated right here on Channels Television. We head to the markets now with Anite Edet. Anite, good afternoon.
Yes, Eni, good afternoon. And thank God it's Friday. And thank God it's the final week of June and the first half of 2024.
Yeah, well, I think that will only be if the market closes in the green today. Then to be truly, thank God it's Friday and the final trading day of the first half of the year. I know by next week, either yourself or Will, you're going to give us like a summary of the first half. Very eventful. We've seen not quiet at all. In both markets, we have seen yesterday was very active for the Treasury bills market. Monday we had bonds, and that was also active even though not as much as expected, but it's been a very active first half of the year.
Yes. And even talking about Nigeria's stock markets and the half year, it's currently at positive 32.9%, so very much in the green, very much
But
robust.
we're not back to 100 yet, Anita.
100,000 points. Well, you still have 6 months away, and of course, Nigeria's stock market can still be one of the world's biggest stock markets
as it did last year.
Just like last year.
We look forward to that.
Repeat that feat. All right, now, so let's talk about the intraday market activities first. Where we have that on your board there, we see positive sentiments across major indexes, which we have for the African markets. Take a look at Nigeria's stock market, NGX, 99,456.96 points. At intraday, it was in the green, 0.06%. And of course, we see all those bargain hunters, particularly across the banking counter, the consumer goods counter, as well as insurance, which was from yesterday. But we had seen the insurance, the industrial goods being unchanged. But for the JSE, we see 1.38%. It led the activities that you see at intraday and back about at the 80,000 points, which it had dropped just a couple of days ago. So back at about that 80,000 points. On the other side of the market, we see the Egyptian Stock Exchange, 0.97%, closing Thursday at 27,766.27. While Kenya's stock market was, for Thursday, it was in the red, no thanks to profit taking, 1.78% in pullback for that market. And we're still talking about Nigeria's financial markets, but this time on the fixed income side of the market. For the fixed income, we saw the Treasury bills market. It traded with bearish sentiment on Thursday, and then the average yield there had expanded by 7 basis points to 22.1%. For the bonds market for trading on the market, it was unchanged at 18.5%. But now let's get deeper details about the intraday numbers, as well as yesterday, where we saw the results of the Treasury bills primary market auction carried out on Wednesday, which saw very strong participation and an oversubscription. Now, to give us more details about that, let's talk to Odinaka Nwokonkwo, fixed income dealer at Access Bank. Thank you for joining us, Odinaka.
Hi, Anita. Yeah. Thank you for having me.
Okay, so now you saw that on our headline yesterday where Nigeria's the Treasury bills auction. We've had 2 Treasury bills auction, and this month we had one a couple of weeks ago, but as that Thursday, the result came in at 284.26 billion naira, very strong. So now, can you tell us what's really driving this appetite for Nigeria's Treasury bills as well as the bonds market?
So what you understand is during periods of high interest rates, people like to play along the shorter term of the curve. Also, on Monday, market liquidity was up in excess of 900 billion. So it's expected that the Wednesday's auction, you will see that a lot of subscription at the NTB, which it was offered around 220 billion. Subscription was in excess of about 770 billion. So that's a strong indication of the market appetite, especially towards the short term of the curve. On the bond space, a lot of people are not really looking to take on that risk, which is why I've seen a bit of weak appetite on that. In the auction, about 297 billion was sold. Also, what we saw subscription was just about 300 billion, while they offered about 450 billion. So that's a strong indication of weak appetite on the long end of the curve.
Okay, so now that takes me to my second question, still doing with this the debt market. We have the latest report that says that Nigeria's Treasury bills debt has surged to about 10.4 trillion naira within just 3 months. That's on the side of borrowings for government now, and that's also the largest balance in Nigeria's history. So now what does this tell us about government borrowings and Nigeria's debts?
Yes, Nigeria's debt is kind of high, though most of the analysts keep looking at debt to GDP ratio, while some people also have the school of thought that the debt to revenue ratio should be looked at also. No doubt, no question, the debt is kind of quite high, and this is considering that they are also financing the budget deficits, which they rolled out. Also, when you look at the extra 6 trillion supplementary budget that they want to borrow, that is also quite humongous. which is exactly what is causing this bearish market. Because when you have increased supply of securities, a lot of people are also willing to offer those securities, driving those rates up, which is exactly what the CBN want to do. They want to keep rates up high, such that the FPIs continue to see those yields at attractive levels, and also in terms of reducing that negative real return when you compare it with inflation, so that those FPIs will be able to bring in those dollars and keep our dollars at least at stable levels where manufacturers can be able to plan. So what we are seeing is exactly what the CBN wants, and those.
Okay, Odinaka, I don't know if you're still there with us. Okay, I think we seem to have lost Odinaka, no thanks to connectivity there, but was just giving us details about Nigeria's debt at the Treasury bills markets. But we have that, and of course we'll be looking out for how that market continues in the second half. Now let's talk about the Middle East markets, where we see also positive sentiment. We see regional stocks there, the Abu Dhabi and the Dubai FM, like I also mentioned, both on the United Arab Emirates, both in the green, almost about the same margin, 0.61% and 0.60% for both the Dubai and the Abu Dhabi. And on the other side of the market, they're closed. The Saudi Arabia's stock exchange, or what you call the Tadawul, in the green, 0.63% for Thursday. That's their closing day. And for the Qatari stock exchange, we see Thursday's close at 0.92% in the green. Now, let's talk about the U.S. market, where we see the indexes are a little changed, and this is because investors are awaiting the PCE, that's the Personal Consumption Expenditure Index, which is widely, it's a gauge used by the Federal Reserves it's used to gauge the inflation numbers, in which it will guide their next movement for the inflation. Now, take a look at early futures. We see 0.07% for the Dow Jones Industrial Average. That's the Dow Jones 30 companies listed on that index. The S&P 500 companies listed there, 0.35%, and the NASDAQ at 0.44%. Overnight in the US, we saw the S&P 500 eke out a narrow gain, and then this is because Wall Street is looking for that number, which is expected to be unchanged, flat at 2.6%, up from what the figure that we saw in April. So they're expecting that number for May to be at 2.6%. And for the core PCE, it is expected to come in at about 0.1%. And for the month-on-month, that's for month-on-month, and for the annualized percentage is expected at 2.6. So for more details on the U.S. market, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market was a bit higher on Thursday, as the Dow Jones was up at 0.09%. The S&P 500 also up at 0.09%, and the heavy tech NASDAQ led the way at 0.3% up. It is clear that many investors are watching to see what will happen over the next few days, especially as it relates to the inflation report that's set to be released. This will have a major impact on if interest rates could be cut anytime in the near future. Jobless claims are also expected to be a bit down this week, as it's expected they will be down by 6,000. This could mean a positive trend for the U.S. economy.
Our Washington correspondent Maria Bird with the numbers on Wall Street for Thursday's closing figure. Now, let's talk about the Asian markets finally, where we see also green colors. It has been green on all across the markets across Asia, the Middle East, Africa, and the US. So what we see now for the Nikkei, we see positive sentiment there, and that's because the headline inflation for Japan's capital city of Tokyo, it accelerated to 2.3% in June. That's from a year earlier, which was up 2.2% in May. And at the same time, we also see that the yen, the country's currency, it's risen to about a 38-year low against the dollar at 161.27. So this is how it reflected for the market. For the South Korea's Kospi index, it was in the green, 0.49%, and this is coming as the retail sales for May is slipped to about 0.2% year on year. That's a softer fall compared to what you saw in April, which was a drop of 0.8%. For the Hang Seng Index, we see a tad 0.01% there in the green. And for the other sides of the market, for the Shanghai Index, 0.73%, and for the ASX 200, Australia's Stock Exchange, 0.10% for the close of Friday's trading session. So for the market, it has been very, very bullish, and most of them are closing the month of June and the first half of the year in the green.
Yeah, and we see that expectations are now high about the Fed cutting rates. I think the percentage has gone to about almost 60% that rate will be cut in September. And of course, whatever happens in the United States affects
it's the general economy.
Except the Nigerian market.
Nigeria is a planet of its own.
Yeah, thank you so much, Anita. All right, now let's head to Europe, where, well, that country is struggling to find workers as their population is aging. So Greece is set to implement a 6-day work week to make up for missing workers. Let's have more on this with Chiponda Chimbelu joins us from Berlin. Hi, Chip. Good afternoon. Well, I wonder how this is being taken. But how's this supposed to work? People will work for 6 days instead of 5 days in a week.
Thanks for having me. Well, in Greece, starting on July 1st, that is next Monday, of course, the normal legal work week will be 48 hours instead of 40 as a standard in several other countries across many parts of the world. Now, in theory, employees will be able to work more if their companies want them to. And those who work more will also get paid more. Employers will have to pay at least an extra 40% for that 6th day of work. The Greek government says the new rules will simplify administration and shed more light on overtime. Now, the aim of this legislation is to help fill gaps in the skilled labor market by fighting undeclared work. And this rule only applies to certain business sectors, and that includes retail, agriculture, and some service sectors. Tourism and the food sector are excluded.
Yeah, well, I mean, one would expect the normal migration policy to come into play here. Are there other options?
Some other countries are turning to immigration as a solution. Now, Germany, for instance, has been simplifying its immigration rules to attract skilled workers in particular. And this week, a new citizenship law took effect. Now, it makes it easier for foreigners to get German nationality. And that, of course, isn't the only major change here. There's also a new visa since the beginning of this month called the Chancenkarte, so the opportunity card. Now, this visa allows skilled immigrants to move to Germany without having a job, and they can start looking for work while they are here. But politically, immigration isn't attractive as a solution. Now, we've seen the far right, which has an anti-immigration rhetoric, rise in popularity in Germany. And that's not peculiar, of course, to Germany. It's also in other parts of Europe. In the Netherlands, the far right Party for Freedom, the PVV, took the biggest share of votes in the last elections. And in France, the far right RN has been leading in polls ahead of the first round of parliamentary elections on Sunday. Now, European workers and voters don't have too many choices. They may have to receive more immigrants, work longer hours, or face economic decline.
All right, we'll see how that works and what that does to the Nigerian population. What about the markets?
Well, European markets are expected to make slight gains today. Investors will be looking out for essential inflation data from the US, where the PCE report for May is expected. Now, that is the index that US Fed policymakers watch very closely. Now, despite signs of easing inflation, Fed Chair Jerome Powell has so far remained vague on the timing of an interest rate cut. The market consensus is September for now. And here in Europe, investors will be looking out for inflation data from France, Italy, and Spain. And Germany's unemployment figures will be released as well. Now, over the weekend, the focus will be on the French parliamentary elections, in which the far-right RN is expected to come out on top.
All right, Chip, thank you so much for that. A lot of interesting stories coming right there. And we know, of course, when we turn to the UK, election is just knocking on the door. Counting down days to that. Now let's talk about what is happening, especially talking about life is now online, everything is going virtual, and of course the risks that come with it. Earlier in the year, we did see reports of the highest risks to businesses this year is cybersecurity. But guess what? It's not just about businesses. It also concerns individuals, ensuring that individuals and organizations are equipped with the knowledge. That's what we want to do this afternoon. Now, according to Terra Nova Security, by 2025, an estimated 60% of organizations will use cybersecurity risk as a key factor when determining transactions and business engagement with third party. And that third party could be you. So how do you get yourself equipped, get your business equipped against this risk? We have Ngozi Duru, a cybersecurity professional, joining us right here in the studio. Hi, Ngozi, good afternoon.
Good afternoon.
Yeah, so how real is this risk in Nigeria?
Oh, okay. So you see, your estimate is right correct, because I think we have already exceeded that. With the adoption of, we are actually a people that adopt technology quite early. And there's a lot of transformation technologically going on, and with that comes a lot of risk, but people are not informed, people are not looking at that, and they are not taking it seriously. But as long as there's the internet, as long as there are transactions going on the internet, as long as there are banking transactions, as long as education is adopting digital technologies, there are always going to be risk.
So now let's talk about how we can protect ourselves. So when we look at the list of risk, there's malware, ransomware, DDoC, spam attacks, phishing. What can people do in their daily transactions, interactions with the social media, with businesses, to protect themselves from getting filtered by this?
Awesome. That's a very beautiful one, because that is one question people aren't asking. As much as we see that there is so much risk out there, people aren't protected, and they do not know how to protect themselves. We're going to take it from individuals, then we'll go down to businesses, because we begin to see that businesses are being affected on a daily basis. But as individuals, to start with, you can begin to implement strong passwords. As simple as that is, you can implement strong passwords on your banking applications. Start with your phone. Strong password can give one more struggle to the attacker who is trying to make an attempt. You can also activate
a strong password that I won't forget?
Oh, yes. So, these days, to help you, I think we should go past what it is, but begin to look at what can help you remember. We have things like the Google password saver. You can actually have your password saved on Google. So you can have 1,001 different passwords, which we actually encourage. We don't encourage you to use one password across different platforms. So that can help you remember. But most of the password platforms will tell you numbers, characters, a mixture of those.
But how safe is Google password or any? I know there's a lot of applications like that. Yeah, because, that can also be infiltrated, and your password can be compromised.
That is an interesting one, actually. But the truth is that they have the responsibility and they have the capability to actually protect your password. So it's going to be in a rare case of a serious attack that will have those kind of data breaches. Yeah, you can also begin to implement things like multi-factor authentication. You see, from time to time, people talk about their WhatsApp being hacked. The solution and the simple remedy to that is activate multi-factor authentication. It's sort of the attacker will have to take one more step to be able to access your account. So things as simple as activate multi-factor authentication, begin to use strong password.
Yeah, so you're going to tell us how, maybe not what to use as passwords, but how to remember the passwords. You're going to tell us that.
Okay.
Or what passwords we can use that we will not forget.
Like they say, security is actually your responsibility. You understand what I mean? It's our responsibility to begin to devise creative ways, right? So I can't tell you exactly what you should do, but within your comfort, you should be able to say, okay, I Obviously not your name. Your name shouldn't come anywhere close in that.
Date of birth?
No, not acceptable. You know, there is also this complex password process. When you try to sign on some platforms, it suggests passwords to you. Yeah, so we can begin to try to devise things like that. So, but
is that safe?
Yeah.
Those suggested passwords?
Yeah, they are safe. They are safe if you find a way of keeping them safe. After that, they actually save. You know, and then for corporations, we're beginning to see that a lot of companies are also being attacked. Apart from individuals, there are several frauds going on. So companies can begin to do things as simple as accessing their systems, their security systems. They should begin to educate their staff, because again, your level of security depends on the awareness of your employee.
So
because
they are your weakest link.
Thank you. So no matter the number of applications, the robust security that you've put in place, if your employees are not informed, if they are not aware, if they cannot detect a social engineering, then that's not that wouldn't do anything at all. So companies must get to the point where they begin to educate, create awareness, let your employee understand what, when they see a phishing email, what it can look like and what to do and what not to do. So on a daily basis, individuals can protect themselves by how I've just said, and companies can also do this as well.
All right, thank you so much. I guess it's a daily thing, and there's no static way or formula. You just have to keep developing
creative ways to protect.
As the challenges come. I mean, because when we see companies considering how safe you are before they can transact with an individual, then it makes you know that you could lose businesses if you are perceived as not being safe or protected.
Definitely. The statistics you just said in your introduction, I think we've come past that. I mean, the numbers are on the high. It's going to get to some, companies should begin to have risk management. You seriously cannot be doing a business, especially like in Nigeria, without a risk management, at least a framework.
All right, thank you so much for your time this afternoon, Ngozi Duru, cybersecurity professional, for those tips.
Thank you very much.
All right, now, well, I guess it's safe to say that's not just for Nigeria, but it also applies to other parts of Africa. So now let's move to other parts of Africa, talking about other parts of Africa. The Central Bank of Kenya is looking to raise 30 billion shillings through the reopening of 2 bonds flagged for budgetary support for the month of July. The 10-year and 20-year Treasury bonds have a coupon rate of 13.75%, with remaining terms to maturity of 9.7 years and 3.9 years. Bidding for the 2 papers will run from the 26th of June 2024 to July 22nd. Further, the Apex Bank is still in the market, seeking to raise an extra 20 billion through a tape sale. That is a 2-year paper with a tenure to maturity of 1.1 years with a coupon rate of 16.97%. And from there, we move to Egypt, where Egypt patched up a key vulnerability of its finances with a mega investment deal paid out, bringing the net foreign asset of its lenders and the central bank into surplus for the first time since early 2022. After running a deficit that peaked near $30 billion earlier this year, the banking system's net position dramatically swung to a positive at $14.3 billion at the end of May. And this, according to the central bank data, which has been shared. It had a shortfall of $3.6 billion in April. And the International Monetary Fund says it has increased loan disbursement to Zambia up to $1.7 billion, with immediate release of $569.6 million. And this is supposed to help the country boost its foreign reserves as it faces a severe drought, significantly impacting its agriculture and electricity generation. The drought situation led to revision of the 2024 growth projection down to 2.0% 3% from 4.7%. All right, let's head to the crypto space now. I see a lot of green from the corner of my eye. There you have it. It's green. A beautiful color to have any day, but most like more on a Friday. Bitcoin is not looking so high, but I mean, at least it's 61,000 at this time. We've gone past 50. The threat of being in the 50s was very real this week. Obviously, it's gained 0.54%. Ethereum is actually of a lot of interest at this time. See, Ethereum is up almost 1%, 0.85%. It's been gathering momentum for some time now. Let's put our eyes there now and find out with Onuwa Obodo joining us now. He's the Chief Executive Officer of Phoenix Online System. Hi, Onuwa. Good afternoon. What are you guys doing to Ethereum?
Wow. Good afternoon. It's a lot of bullish movement on the crypto space at this moment. Currently now, as Bitcoin is losing its dominance. So we're seeing some other coin taking off. Currently now we're speaking more of Ethereum. It's gathering momentum, but currently we have another new stakeholders on the platform, which is Solana.
So I guess, can we comfortably say we are in the old season now because Ethereum is doing well. Solana now is also getting attention. Oh, wow. I think... I hope we can get Onuwa back there because Bitcoin is supposed to be the king of crypto, but I don't know if Bitcoin can be overtaken. Ethereum first getting a lot of attention, and now Solana receives spot ETF, and now it's making it the 5th highest when it comes to market cap. Yes, so if you have investment in Solana or you had before now, you might be smiling at this time, you know. So it would be interesting to have that conversation, but unfortunately, I think we cannot have Onuwa back. But we'll see how the weekend goes, and then by Monday, I trust Ladi Williams will drill in on this, even though he'll be back tomorrow evening, 7 p.m., Saturday, 7 p.m. for capital market. It will not be on crypto, it will be on, you know, other financial market. But that's where we draw the curtains on Business Incorporated today. Thank you for your company. I hope it was worth your while, and I wish you a restful weekend. We'll start the cycle again next week. I'm Ini John Mekwa. You take care.